Hey, what's up, stock compounders? Brad here. So today we're going to find the most beat up stocks over the last 5 years to try to see, are these companies that deserve to be completely destroyed, or has the market overshot what a reasonable valuation for these companies is? And what's really inspiring this video is reading the chapter about John Templeton in Richer, Wiser, Happier. Now, John Templeton, one of his strategies, right, for finding companies, he says the best way to find bargains is to study whichever assets have performed most dismally in the past 5 years, then to assess whether the cause of those woes is temporary or permanent, okay? Most people are drawn to investments that are already successful. We're going to look at investments that have had the crap kicked out of them over the last 5 years. So the way we're going to do that is we're going to go into value line. Okay, value line, Buffett loves value line. Monish Pabrai has talked about value line. It's a fantastic service to find ideas, particularly through the screener that I'm going to show you right now. So what I'm going to do is screen for the total 5-year returns. Okay, if you had bought 5 years ago, how would you have done? So that's what this is, total return 5-year. And then I'm going to add a filter called percent insider holdings. Okay, this is a filter that I like to use. It really allows me to figure out, okay, does management have skin in the game or not? It's really important to me. If I'm investing in a business, I want to make sure management is also investing in that business as a shareholder. So the way we're going to do this is we're going to sort by total return 5 years, okay, from the worst. So we see a bunch of these negative 100%. I don't think I want negative 100%. I want the business to still be, in existence. If you've lost 100% of your, if the equity has gone down 100%, that means it's at zero and the company is bankrupt. So what I did is I basically went from minus 100 to minus 75%, okay, with the total return over 5 years. And then the insider holdings, I wanted to be above like 17% is what I ended up at. So I'm going to show you guys the spreadsheet that I pulled out of here. I also added the industry just so I could get a sense, what are some of the dominant industries that are just getting slammed over the last 5 years? And also, for the results that turn out to be interesting, I want to know what industry it's in to decide, okay, is that even worth me digging into or not? And then I've included the market cap as well. And so basically I went down the list starting with the highest insider ownership, okay? 85% was the highest. Super small, less than $1 million market cap. So I went down this list and I looked at Value Investors Club, all right? Which one of these beaten down stocks over the last 5 years that has a high insider ownership has a write-up in Value Investors Club? And then what I did based on that write-up, I sometimes it's explicitly stated in the write-up what the person thinks the stock is worth, what it should be priced at. Sometimes, you got to do a little tinkering. But what I did was I figured out, okay, what is this, investor who wrote this thesis for this company think the business is worth, okay? And I compared that to what is the price today to decide, all right, what is the potential upside here? This is a pretty fresh write-up, February 2021. Some of these are a little more dated, maybe 2 years old. So, with any of these, you have to dig in and you have to understand the current investment case. So there's definitely work to be done here. But I thought this was an interesting way to kind of generate a starting list of companies to look at by seeing, all right, what is the potential upside based on the most recent valuation work done on Value Investors Club? and then kind of go from there. So as I went through down to, I kind of burned out at about 17% insider ownership. I came out the other side with 8 businesses, okay? 8 finalists for, this way that I'm screening here. And you can see the different industries. You can see the market caps, when the Value Investors Club write-up was written, and then what the potential upside is based on the price today and the value based on this write-up. So you see here, the biggest upside potential, 38x, okay? Now, from when this write-up happened in January 2019, unfortunately, this is the most dated write-up, okay, for the greatest upside case here. I think the write-up was written at like $27 per share. They were estimating it could go up to around 62, okay? Of course, since January of 2019, the stock has come down from 27 to like $1.60, okay? So it's really gotten slammed in the last 2 years or so. But did it deserve to get slammed that hard down to $1.60? That's what we need to figure out. 2 other sources I looked at, Open Insider, okay, kind of tracks insider buying and selling for different companies. So, I made a little note what was happening on Open Insider from insider activity. I'm sure there's a number of websites where you can get information about that from, but this is the one I've been using. And then this last column here, within Dataroma, if I type in these companies, how many gurus, how many super investors own these different stocks? There's only one of these 8 companies that is currently owned by a super investor, and we're going to talk about who that is. One of my favorite super investors, actually. But why delay? Let's just jump right into that. So type in GTT, and you can see who owns it. I might have to refresh this. There it is. Greg Alexander, Conifer Management. Okay. Greg Alexander is a guy who just recently came across my radar, someone who Warren Buffett holds in very high regard. Used to work for Sequoia, now runs this fund, Conifer Management. Also, big addition to Alibaba in the first quarter of 21 for Greg Alexander. A little trim on GTT for Greg Alexander. And it's only, 0.5% of his portfolio. But it's a very small company. So it's interesting. So that's GTT. I think I want to just pull up, I just want to go through a few of these. So Volk 20x upside, 8 million market cap, super tiny. Let me just refresh this feed real quick for you guys here, so you can see my dynamic face as I talk here. Right, so what else can we say about this? 20x, 10x, 4x, those are all potentially interesting. With this 8 million market cap, I gotta wonder what's the liquidity for shares in a company like that. Diversified drug company, I don't know. That's not really my wheelhouse. Wireless network could be interesting. Again, you got some pharmaceutical companies in here. AutoWeb, I guess, is an advertising company. Now you get down here, MDCA. From when this write-up was done, just 4 months ago, it looks like 4 or 5 months ago, the price has come up to fair value on that business, according to what the VIC write-up had as fair value. MMLP, this was really a write-up for the debt, not for the equity, not for the stock. So they were basically arguing that the value of assets covers the bonds, the debt, that those were kind of safe investments, the bonds. So that's not really in my wheelhouse in terms of bonds. And then Club, right? Club is in bankruptcy. So could be an interesting special situation for those of you who have experience in that area. It's not something I'm going to go near. Really, the only one that's interesting to me is the one that a guru owns, right? Greg Alexander with the most potential upside. So I think probably in a future video I'm going to dive into GTT. It's a long write-up, guys. It is a very long write-up. It's interesting what it says here. Investment viewpoint: a rapid growth compounder with an asset-light, disruptive, high-return, cash-generative business model. Whew, that gives me chills. Those are some great buzzwords there for us value investors. Large TAM with strong and sustainable competitive barriers. Run by an outstanding and well-experienced management team. Prudent capital allocators with solid track record of execution. And a significant ownership, including recent insider buying. So everything that gets me excited right there. Obviously, I want to know what this particular investor, how they would explain what has happened over the last maybe 2.5 years for the stock to drop from 27 down to $1.60. That's actually not in here, that potential outcome. But it's like what John Templeton says. The best potential, buying opportunities are when everyone else is running for the exits, right? It's very easy for market participants to overshoot running to the exits. So that could be a situation here. I just don't know yet. I haven't done much digging on it yet. But if you guys are familiar with GTT Communications, curious to hear from you about that one. And let me know what you guys think of this exercise, this way of screening for companies that have just gotten demolished over the last 5 years. Do you guys run any screens like this, looking for orphaned stocks, looking for beat down stocks where it's possible that the herd has overshot to the downside these businesses? It makes sense to me intellectually how that could happen. So and we saw it very well laid out in Richer, Wiser, Happier in John Templeton's chapter, how that happened in the 1930s, particularly towards the end when there was a pending war. The U.S. seemed it was imminent that we were going to get involved in World War II, and things were just getting hammered. So obviously the market is not that way today. But as you can see here, there are still companies that are getting the crap kicked out of them. I'm sure a lot of them deserve it. But it's possible there's a few, golden nuggets in here that haven't deserved the beatdown over the last 5 years that they've gotten. So, let me know what you guys think of this. If you've done this yourself and what particular filters you've used to find these orphaned and beaten down companies. And let me know if you're interested in more of a deep dive on GTT Communications. So anyway, that's all I got for today, guys. Thanks for watching, and I will see you all in the next video. Take care.